Welcome everyone to Vested Interest. This is Shane back for our weekly portfolio update video. We do this every Sunday morning. We did add $1,557 in new capital to the portfolio. So we will cover what we purchased with those funds. We will cover any options we were in, any dividends we received, all the activity out in the portfolio. We cover weekly every Sunday morning. I like to show my portfolio, be as fully transparent as possible here so that those of you who maybe are on the fence about investing or those of you who maybe are just getting started investing can see a real portfolio built out over time to help give you some confidence if you haven't started investing. And those of you, again, who have started and maybe have been investing for a while, maybe you're seeing some red in your portfolio, you're starting to see the ups and downs of the market, maybe you're getting freaked out a little bit. I want you to see, again, a real portfolio built out over time so you can understand there's going to be highs and lows, there's going to be ups and downs. The market goes up and the market goes down throughout the year at different times. And if you're interested or if you're invested in individual positions, you're going to see that in those individual positions as well, right? Every position you buy is going to have a 52-week low and a 52-week high, and it can bounce in between that 52-week high and that 52-week low at any time throughout the year for a multitude of reasons, sometimes around earnings, sometimes around information in the news, sometimes for no real reason at all. It just seems that it's either on a run or on a downturn. And again, I want you to see that so that you can build some confidence and understand that's part of investing. Just stick with it if you are doing the research on good companies and the fundamentals of the company haven't changed. Whenever you see that red, that should be an investing opportunity. But before we get too far into the video, again, this will be our weekly portfolio update. I want to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who have subscribed to the channel. I really do appreciate it. The channel continues to grow because of people like you. And for those of you who may be stopping by for the first time on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividends and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks within the portfolio on a weekly basis, but I also do larger purchases as well if I have extra funds from a bonus or a side job, something like that. I cover all my investments into the portfolio. Again, that's what this video is. I do not have a paid Patreon account. I do not have any other sites that I'm trying to send you to, or any newsletters to sign up for, or any websites to sign up for, nor do I ever intend to have any. We all have enough to pay for, so it's free to see what I'm doing in my portfolio. But if you would like to help out the channel, if you could take a moment and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, go ahead and join us on this journey to financial freedom. Hit that subscribe button, subscribe and join the Vested Interest community. Make sure you click that notification bell so you're notified whenever we put out any new content. Along with these weekly portfolio updates we do every Sunday, I do a stock pick of the day series Monday through Thursday whenever the market is open. Typically every Monday through Thursday. Sometimes I will miss a day here and there if I have other things going on. I do have two kids who are in sports now, so it's getting harder to be here every day pumping out videos, but I'm going to try to continue to do that as much as I can for as long as I can. So again, doing all that really does help out a small YouTube channel like mine with the YouTube algorithm. Another thing that helps out is watch time. So go ahead and make sure you're watching the videos to the end. Again, that really does help out. And drop a comment down below. Let me know what's going on in your portfolio. What are you buying? Maybe you're selling some things. I know with the markets hitting all-time highs recently and continuing to hit all-time highs, I feel like every week or every other week we're getting a new all-time high in one place or another in the market, whether it's the S&P 500, the NASDAQ, the Dow. Somewhere is hitting a record high, it seems like, every week or every couple of days. I know some people are selling and taking profits and stashing a little bit of cash on the side just in case we get a big market pullback. If that's you, let me know what you're selling. I'd love to hear from you in the comment section down below. But let's get back into the video and see what's going on in my portfolio for our weekly update. And if I didn't mention it, really a special thank you to all the subscribers out there. Again, you guys are awesome. Really do appreciate it. Now, first activity in the portfolio we're going to cover is the options for the week. We did throw out several covered calls. We only got the one to hit on NextEra Energy. We sold to open one covered call, so -1 means one contract. One contract represents 100 shares. NEE is the ticker of NextEra Energy. This is a utility company out of the utility sector. And with an expiration date of September 25th, right? We entered this on the 23rd, which was Monday. The expiration date was 27th, which was Friday. We try to do weekly calls here with an $85 strike price. That's what that 85 is. Covered calls means I owned the shares, so I owned 100 shares to be able to do the one contract. we received 47 cents per share, right, which amounts to $47, but then you pay a little bit of fees right here. That's what the 55 cents is. And we received $46.45 after fees. So we keep that options premium regardless of what happens with the shares. Now the shares did expire on the 27th, right? So you can see that here. That's what this represents. Expired contract, one contract, NextEra Energy. That's the same call. Expiration date September 27th, $85 call. It expired worthless, out of the money, right? So we keep those shares, plus we keep the options premium, and that is the goal. We want to keep those shares. Now, sometimes positions are called away that I don't mind them being called away, and I'll say NextEra Energy, if it would have been called away, it's another one. It's right there at its 52-week high, and I believe it's going to bounce off that and come back down, which is why I used that 52-week high as kind of a benchmark to be able to set this call. And I am comfortable if this one was to be called away at $85, I would have let it be called away, and I probably would have reinvested the shares somewhere, or the funds from those shares somewhere else. I probably will continue to try to run this NextEra Energy call again next week. I might boost the depending on what Monday looks like, I might go $86 or $87 or run $85 again. It really depends on what the options premium payout is for those. We'll see. Again, we'll cover that next week, whatever we hit. We always throw out more than one, so hopefully more than just NextEra Energy does hit this week, and we can pull in some more options premium. We reinvest the options premium, so part of that $1,500 that we invested this week is this $46.45. This options that we're doing is a way to turbocharge or supercharge the investing into the portfolio. Now, dividends, first dividends and only dividends came in on the 27th. Now, a couple different companies paid us here. Kraft Heinz Company, ticker KHC, out of the consumer staple sector, paid us $85.19. Now, we do have the DRIP set, so that just stands for Dividend Reinvestment Plan. So anytime a company, in this case Kraft Heinz, pays out dividends, the $85.19, goes right back in and picks up more shares of the same company. So we picked up 2.42783 more shares of Kraft Heinz. And on the 27th as well, we received a payment from Bank of America, ticker BAC. This is a bank out of the financial sector, paid us $41.92. And again, we have the DRIP set. So right back into Bank of America it goes, and picked up 1.05276 shares of Bank of America. All total, we received $126.48. And the new shares added an additional $4.97 in passive income over the next calendar year. And when you hear people say the compound interest or dividend snowball effect, that's what you are seeing here, right? You're seeing we already owned positions in Kraft Heinz and Bank of America, paid out dividends, right? The $126.48. Those dividends bought more shares of each company respectively, and those new shares added additional capital. That is compound interest, or the dividend snowball effect, right? It's going to continue to grow as long as we hold the Kraft Heinz and Bank of America shares. This will happen every quarter. So 4 times a year, we'll get the payout, we'll get the new shares, add new capital, and it will rinse and repeat and get bigger and bigger over time. Now, obviously, that snowball will grow faster if we add to these positions over time as well. That's the other driver of that snowball. The snowball is rolling down the hill. The hill is time, and there's several ways for it to grow. Capital that we put in, new capital, the dividends paid out by the positions in the portfolio, dividend raises from those positions as well, and then the reinvestment of those dividends, buying new shares and adding additional capital. And again, that snowball is just going to keep getting bigger and bigger the more capital we have added and the more time that passes. Now on to the first new investments. We did add $1,105.84 on September 23rd here. And with those funds, we picked up 8 more shares of Vale, ticker VALE. This is a mining company out of the material sector. We picked up those shares at $10.35. We've been adding to this one the last several months here, nibbling, 6, 8, 10, 12 shares a pop. And I will say this really ran up significantly by the end of the week. So I'm glad I bought it early in the week. You'll see here whenever we do the overall portfolio update. I think this one was very close to $12, just under $12 there. It ended the week. So this one has really recovered here. Nutrien, we added 2 more shares to our Nutrien position, ticker NTR. This is also out of the material sector at $46.91. Now, Nutrien is also a Canadian company, so there are some tax implications here. I don't know what your brokerage is or what brokerage you use. I use Ally Bank for my brokerage. They take out the taxes for my positions, and I don't have to worry about it at the end of the year. You need to understand what your brokerage account does, because if they don't take the taxes out, if you own any foreign companies, even if they're out of Canada, and we do have agreements, the United States does have agreements, if your taxes are taken out by you, or you are going to be responsible for them, or whoever does your taxes will be responsible for them. And even though my brokerage pays them right away, that doesn't mean that I don't have to account for it at the end of the year. And sometimes I believe they actually pay a little bit more because it's a Canadian company than we do for these dividends. But that's neither here nor there. My point is, make sure you understand what your brokerage does, whether they take the taxes out for you or whether you're going to have to account for those taxes at the end of the year. Now, we did add 4 more shares to our Comcast Corporation position, ticker CMCSA. This is out of the communications sector. Picked up those shares at $40.61. Continue to add to our Alphabet position, ticker GOOGL. Picked up 4 more shares there at $162.81 per share. 2 more to our CVS Health Corporation position, ticker CVS, out of the healthcare sector here at $57.77. Another one that's really recovered. This is back in the low 60s now. I may back off and adding to it. I think it's still a little under my cost basis, but I have really built this position out. It's one of my larger positions now. Now, this $1,105.84, and the new shares picked up added an additional $26.49 in passive income over the next calendar year. And we weren't done. We went back in on September 27th, added another $451.23. And with those funds, we picked up 2 shares of our Schwab Strategic Dividend Growth ETF, ticker SCHD here. And this is one that we are buying weekly. I will say Schwab also recently increase their dividend, though it is going to drop, and it's going to drop because they are doing a 3-for-1. I believe it's a 3-for-1 split. So they are going to, for every 1 share you own, you will get, or maybe it's a 4-for-1 split. Drop a comment down in the comment section below. Is it a 3-for-1 split or is it a 4-for-1 split? I'd have to go back and look at it again. I think it's a 3-for-1 split. So I believe it is for every 1 share you own, you will get 3 shares. Now, obviously, that will drop the price per share down to account for that. So it'll be the same amount. If you have $10,000 invested in SCHD right now, you'll still have $10,000 invested. You'll just own more shares of SCHD, and they'll be worth less per share. So it'll go down. I think it's around $84 per share. Here is what we paid, $84.42. So I think it'll go down to like $27, $28 per share, right in there. So it'll be the same amount. It'll just be more shares. We picked up 2 shares at that $84.42, and I did adjust this a little bit, and I probably will adjust it a little further. Since the price is going to go way down, we might look up picking 3 or 4 shares up a week instead of the one we were doing. But what we did do is we were adding just 1 share of SCHD, and then over the last couple of weeks, what we've been doing is taking the options and adding any options money, maybe a little bit more if we have to add an additional share. So I'm going to still try to build out this SCHD position. I just want to wait and see what that actually looks like, what the amount will be. So we'll probably be buying at least 3 shares of SCHD going forward, if not 4 or 5. Now, Vanguard Total Stock Market, ticker VTI. This is another weekly purchase, and we're going to continue to purchase this weekly regardless of what the market is. It's hard for me to pull the trigger on some of these because they're at all-time highs. $282.40 is what we picked this up at this week, and that's right close to its all-time high. And I know it's probably overpriced. Some of you may be screaming, save your money and wait for a pullback, but you never know when there's going to be a pullback. And whenever there is a pullback, I'll continue to buy weekly, just like I'm buying now when they're at all-time highs. That's the thing about dollar cost averaging. Sometimes you're going to pay whenever they're at a high. Sometimes you're going to pay whenever it's at a low. Sometimes you're going to pay in that middle range. It's just the nature of dollar cost averaging. Now, the 2 shares of SCHD, the 1 share of VTI added an additional $9.32 in passive income. Total invested was $1,557.07, and the total passive income with the new capital we added, as well as the dividends paid out from the company's Kraft Heinz and the other one that paid out there, added an additional Bank of America paid out $40.78 in passive income added to the portfolio here. Now, a quick run through the sector weights here. You can see communications makes up 10.8% of the portfolio. Consumer discretionary is sitting at 5.56. I will say BABA was another one that really ran up this week. So this position, I think it was down in the 4% range after we sold out of Starbucks there here a couple weeks back, and that was one that was called away. We were running options on. So that's just an example of I set a price, and whenever it gets to a price, if I feel like it's overpriced and I'm running options on it, that's why I'm running options on some of these positions whenever they're screaming high, in my opinion, or sometimes whenever they're really low and I want to continue to add to the position. But running options is a way to add a little bit of juice to the portfolio here. Consumer staples makes up 9 point, and the reason I say that is because BABA really ran up. I probably will look at running options on BABA again going further as long as it's run up like it is. I don't mind if it was called away at $107 to $110 per share, which is where I think it ended up. Consumer staples makes 9.33% of the portfolio. Energy makes up 5.8%. Financials at 4.75%. Healthcare is still the largest position at 13.77%. Industrials makes up 6.48%. Technology is going to grow as I build out the Google position there. It makes up 8.49% of the portfolio. Materials at 8.91%. Utilities at 9.41%. REITs and real estate at 9.06%, and ETFs is starting to get a bigger chunk of the pie. Eventually, this will be the largest chunk of the pie at 7.64%. Over here on the right, you can see the same percentages as match the pie here, and then the dollar amounts associated with each sector as well. Now here it is, and again, I show this weekly. I want you to see a real portfolio built out over time. I know a lot of YouTubers out there, they don't show their portfolio weekly, heck, monthly, even quarterly, or even once a year. They'll put it behind a paid paywall where you got to sign up for their courses or sign up for some pay-to-play scheme where they're, not financial advisors, but they certainly are charging you to see what's going on in their portfolio and for financial advice. Whether they say they're not financial advisors or not, if someone is charging you to see a portfolio or hear their opinions on their finances, whether it's just what they're doing or not, that's financial advice in my opinion, and I don't believe in this day and age where you can get so much free information, you should be paying for financial advice. You can do it yourself. I am not a financial guru. I did not go to college for finances. My parents are not wealthy. They did not teach me how to invest. They don't even have any kind of brokerage accounts or accounts where they invest at all. My mom doesn't even have any retirement actually beyond Social Security, and my dad has just his pension from the union where he worked as a mason for years. I am not I do not come from a financial family. And sorry about that. Looks like we lost power here at my house. That's the generator coming on. But again, you can learn how to invest if you take the time, read some books, go check out your favorite investors. Warren Buffett is a good one. There are a lot of books that he's put out, some other great ones out there, and really just time in the market. You'll learn along the ways. You can look at some of the greatest investors, 13Fs, to get ideas of what they're buying and selling. And if you really want to learn while you're growing or invest while you're learning and growing, go ahead and look at some ETFs right off the bat. S&P 500 ETF like VOO. I have VTI, which is the Total American Stock, New York Stock Exchange, Total American Stock Exchange, as well as SCHD, which is another ETF, a dividend growth ETF. Some people like the Vanguard equivalent to SCHD, which is VYM. But Warren Buffett would recommend at a minimum of investing, or for most people, investing in the S&P 500. So something like VOO, that's Vanguard, SPY, SPY. There are several other ones out there that you can look at, and then invest in those ETFs. And while you're learning, start looking into companies, try to figure out and learn how to read a balance sheet, income statement, understand what your criteria you're looking at. Do you understand what revenue is? Do you understand what margins are supposed to be? Compare companies to different companies in the same sector. Like, for example, if you're looking at something in the oil and gas sector, you might want to look at Chevron, ExxonMobil, Devon Energy, Occidental, which is another one, Oxy, OXY, which is one that Warren Buffett's been buying, right? And compare the companies, see what the differences are. And then after a little while, once you get some confidence and start understanding businesses, know how to read a balance sheet, know how to do a discounted cash flow analysis to where you can identify a price around a price you're really, or a range of prices that you're willing to pay for a company, then start adding some individual positions while you're building out those ETFs over time. But at least get started with those ETFs. In my opinion, investing is the only way to secure a financial future. You can't count on your job. You know, I have a pension through the company I work for still. Most companies don't have pensions anymore, but even that is not guaranteed, right? A company could decide to cut their pension out, or 401k match. Like my company does a 401k match as well, so I have my 401k as well as this portfolio. I have several different retirement accounts I'll be pulling out of whenever I get ready to retire. This one here is going to get me to early retirement before I retire and can access those other ones. That's the idea behind my portfolio. But in my opinion, the only way to get to financial freedom and out of the rat race, out of the 9-to-5 job that you might have right now, is taking that active income from your job and investing it, right? Max out those taxable accounts like your 401k if you have it. At least do the minimum to get the match from your employer if your employer doesn't match. So at least max out your 401k. If you can open up a Roth IRA or a regular IRA or just a regular brokerage account, go ahead and do that as well. And then that way you can start putting money away. Like I said, start with that VU, start with that S&P 500 dividend ETF, and then learn the rest along the way. And then once you feel confident, you can get into some individual stocks. All right, I'm going to get off my soapbox. Hopefully that helps someone out there hear that needed to hear that maybe has been thinking about investing who has not done so. But again, I show this every week. I make mistakes. Hopefully you can learn something from my mistakes, and drop comments down below. Ask questions if you need to. If I don't have the answer, I'm sure someone in the community can help you. That's the idea behind the vested interest community, helping each other as investors out there. We can't benefit from each other's investing, but we can certainly benefit from each other's investing knowledge. So ask questions, drop comments down below. I'll try to answer them. And if anyone else has answers, I'm sure they will as well. So as you can see here is the ticker, all the different positions in the portfolio, how many shares I have of each position, current price as of the close of business on Friday, the market value as of the close of business on Friday, my average cost per share in this column, my purchase price, how much I have into each position. This does include reinvested dividends. Total return, whether I'm up or down, again, I'm going to show it. I'm going to try to be as transparent in the portfolio as possible. Sometimes I'm up, sometimes I'm down. Not a lot of red right now, but you've seen a lot of red in my portfolio if you've been hanging out with me for a while. You know, I've been doing this for a few years now. Percent return, up or down, obviously in the green, and the brighter green it is, the higher it's up, and in the red, it means I am in the negative. So you can see several positions still in the negative here, even though it's starting to be a lot more green in the portfolio than there has been. Well, because markets are at all-time highs, that's going to happen. What sector each position falls in, whether they're a quarterly, monthly, semi-annual payer. Also, you'll notice a lot of these positions are highlighted. That means they've recently, or at least increased their dividend once this year. Some positions like O, ticker O, they increase their dividend, incrementally, little small increases several times throughout the year. SCHD and VTI kind of have a not a definite increase every quarter, but they have a different payout every quarter. I did not actually put in the SCHD update. I know that 70 cents is wrong. They did just recently announce a dividend raise much higher than what it was last year. Though right now, if you look, the numbers are a little funky because they're starting to account for that dividend split already, or that stock split already. At least stockanalysis.com is. If you go to stockanalysis.com, it looks like they're paying like 25 cents per share in a dividend right now. But again, they're already accounting for that stock split that's supposed to happen, I believe, on October 9th. So you need to have shares of SCHD, and several other Schwab ETFs are going to do a stock split as well. So if you have any of those other ones, I believe it's October 8th or before, you need to hold those positions to be able to get that split. Current yield as of the close of business on Friday, my yield on cost, portfolio weighting. So what you saw on the previous slide was each sector weighting. This is the individual weightings. And I do have a rule. I do not like any one position to be more than 10% of the portfolio, and I do not want any one sector to be more than 20 to 25% of the portfolio. I don't think I have anything close except for possibly Johnson & Johnson at 6.25% of the portfolio. I think that's really the largest. Yep, that's the largest position right now. Is it? Yes, it is. Estimated annual income in this column, payout months in this column, dividend growth year over year, and where it sits at 15% of a 52-week low. I want to talk about this for a second. If you didn't catch my 3 stocks I'm going to be buying in October video, go ahead and check that out. I'll try to drop a link to it in the pinned comment down below. So check that one out. And I'm going to cover one of the stocks here that I'm looking to buy in the month of October for an example to show you how I use the 15% of a 52-week low column. So Procter & Gamble, right, 15% of a 52-week low is $162.66. My cost basis is significantly lower than that at $145.23. But currently, the current price is actually significantly above my cost basis. So I am willing to pay more, 174, let's say $173, let's say $174, just call it even, it's $173.48. But I'm willing to pay that $173 or $174 per share, even though it's over my cost basis of $145.23, and even though it's above where it sits at 15% of a 52-week low, because if I buy that, all it's going to do is increase my average cost per share. Now, so I'll add, maybe 10 more shares here, and so long as it doesn't bring my average cost per share above $162.66, I can add to it, right? That's how I use that 15% of a 52-week low. I'd like to keep my average cost per share under 15% of a 52-week low, but this does not mean that I am not going to add to a position just because the current price is over where it sits at 15% of a 52-week low. If my cost basis is low enough, such as Procter & Gamble is, I can add to it so long as this number here doesn't get higher, or this number here doesn't get higher than this number here. That's how I use that. And you can set your own criteria. That's just one of the things I like to use in my portfolio. So total shares, 5,805.491 shares. Current market value, current portfolio is worth $310,176.92. My purchase price, how much I have into each position, is $272. $272,000. I'm sorry, that's the garage door opening. My wife's opening the garage on me. Currently, I have $272,690.37 into the portfolio. That's my own funds. Also includes reinvested dividends. Total return is $37,486.54. I do not pay attention to this. If you've been watching my videos any length of time, you know that I don't care if I'm up or down. I mean, I like to see green, don't get me wrong, but even whenever I was down, I said the same thing. So percent return up 13.75%. Again, nice to see, but not something I focus on. Current yield, 3.84%. My yield on cost sitting at 4.368%. And this is what I'm focused on. That's why it's circled in red. The estimated annual income from the dividends paid out by all the different positions in the portfolio sits at $11,909.78. And very close, getting very, very close. Definitely going to pass that in September to over $1,000 per month. Dividend growth is sitting at 5.95% year over year. And I think that's going to go up. We have a few positions in the portfolio like BABA. They recently started paying dividends. Google, they recently started paying dividends. So we don't know what their dividend growth is going to be yet. But I'm interested to see here as we enter in 2025 what they increase that to. I'm hoping for double digits for both of those. Ally Bank's another one that stopped growing their dividend here the last couple of years. I'd like them to start again. Kraft Heinz is one that has not been raising their dividend. I'd like them to start raising it again. Though whenever I bought them, they weren't, so I knew that going in. And I think there was one other. Yes, AT&T was another one I bought knowing that they had recently cut their dividend, but I would like them to start increasing that dividend again over time. We'll see what they do here, but they haven't yet. So the fingers crossed there. Now, I will say some of the positions like Kraft Heinz, I've been waiting on this one for 3 years to start growing their dividend again. It gets 4, 5, 6 years in. I might look to trim this position out and replace it with a company that is growing their dividends. So we'll wait. Right now, I'm still comfortable with the 4.5% yield on this one, holding it and seeing if they do start raising that dividend again. Actually, it's down a little bit, so it may be one that I look to nibble on as well while it's down. We'll see. HVAT is another one as well. Haverty Furniture Company is another one. But see, CVS has really rebounded. BABA's really up. I think $107.32 there. So that one's really rebounded as well. Nice to see some of these positions that have really rebounded. All right, I think I'll stop rambling. Hopefully you get the picture. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. It really does help whenever you guys do that. Again, hit that thumbs up button. Hit the subscribe button. hit the notification bell. Make sure you drop a comment down below. Let me know what you're doing in your portfolio. Are you adding anything? I know markets are at all-time highs. A lot of these positions have really run up, so it's hard for some of us to pull the trigger. But let me know what you're buying, or if you're selling. Maybe you're using the all-time highs to trim some positions or take some profit and set it on the sideline for a potential downturn. I don't typically like to do that. I always keep a little bit of money on the side, but that's just money I put into my savings regardless. And you should probably get in the habit of doing that as well. Make sure you have, somewhere where you're funneling a little bit of cash into for savings, to where if there is a market downturn, you've got some cash on hand to do that. That's what I do. That's how I kind of keep my investing money and my savings money separate. And then whenever I do see a downturn, I might throw 6,000, 7,000 into the market. If you've been watching the channel, you saw me do that with AWK, American Water Works, where I dumped about 10 grand into the position whenever it really pulled back. So having a little bit of money on the side for those type of pullbacks is what you want to do, whether it's over the overall market or individual positions. Well, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week. Apologize for all the background noise. We lost some power here. My wife came home and opened the garage door on us, which is where I do these videos. So apologize for the background noise. I'm trying to deal with a house full of other people whenever I do these videos. It's just the nature of having a family. Those of you out there who have a wife and kids or a husband and kids know what I'm talking about. Well, I'm not a financial advisor. I'm not your advisor. I know this is getting a little bit long, so go ahead and read through this, but make sure you're doing your own research whenever you're doing any investments so that you can make sure your investments are tailored to your needs.